You keep losing, you keep offering, you keep getting beaten, and you assume it is something about you. Your income, your deposit, your timing. It is not. There are rules operating in this market that you were never told about. Today, I am going to show you 3 of them, and then I am going to tell you what to do about it. Rule 1. The tax break that ran for 24 years. From 1996 to 2020, landlords could deduct their mortgage interest from their rental income before calculating their tax. That sounds technical. Here is what it meant in practice. A landlord with a £200,000 buy-to-let mortgage at 5% interest was paying £10,000 a year in interest costs. That £10,000 came off their taxable income. If they were a higher rate taxpayer, the saving was £4,000 a year, every year, while they were simultaneously building equity in a property funded partly by a tenant. You, buying your first home, received no equivalent relief. You saved from post-tax income. You paid stamp duty on your purchase. You paid for your own survey and solicitor. The playing field was not level. It was tilted by design, maintained by legislation, and never once explained to the people losing bids because of it. The rule changed in 2020. Highly leveraged landlords face greater costs now than before 2020. The pressure this creates is real, and it means some properties are coming to market that were not available 5 years ago. Rule 2. Cash wins in ways money cannot fully compensate. A cash buyer can complete a property purchase in 2 to 3 weeks. A first-time buyer with a mortgage typically takes 3 to 5 months. That timeline difference has economic value to a seller. It means less time in an uncertain state, less risk of the buyer's position changing, less risk of a surveyor finding a problem that triggers a renegotiation. Compress your timeline. Mortgage in principle before you view. Solicitor instructed before you offer. A written personal letter to the seller. These actions reduce your timeline and reduce the seller's risk, which changes the calculation even when your offer is not the highest number on the table. Rule 3. Help to Buy helped developers more than buyers. Between 2013 and 2023, Help to Buy gave first-time buyers government equity loans to purchase new-build properties. The intention was genuine. The outcome was partially perverse. Because buyers had access to 20% more purchasing power through the government loan, developers priced their new-build stock higher to capture that additional capacity. The government subsidy became a developer subsidy. Independent research found new-build Help to Buy properties carried a premium of 15 to 30% above comparable existing stock. Help to Buy ended in March 2023. With the government subsidy gone, new-build developers no longer have the same pricing power. In some markets, new-build prices have softened meaningfully. If you were priced out of new builds under Help to Buy, revisit those developments. The negotiating position has shifted. Now, before we get to the 3 things you can do this week, a quick note. If you are trying to understand your credit position before you speak to a mortgage broker, Experian's free credit check tool gives you a full picture of what lenders will see when they assess your application. The link is in the description below. Costs nothing and takes 5 minutes. Knowing your number before you sit down with a broker is the difference between a productive conversation and a wasted one. 3 things to do this week. 1. Open a lifetime ISA today if you are between 18 and 39. For £1,000 a year, government adds £1,000. Free money that compounds. 2. Speak to a whole-of-market mortgage broker, not your bank. They access lenders offering up to 5.5 times income for specific professions. Most people do not know this is possible. 3. Research towns receiving infrastructure investment in the next 5 years. Rail connections, Freeport zones, regeneration funding. Buy before the investment arrives, not after. The appreciation is priced in during the anticipation. The full 35-minute investigation into how the buy-to-let market was built, who designed the rules that govern it, and what the complete range of strategies looks like for first-time buyers in 2026 is on this channel right now. Link in the description. Subscribe if the follow the money analysis is what you are here for.